Lee Munson, the takeaways from the market action. First quarter is done. And now what?
Now what, right? Every investor that I talk to, including what, some of your last guests were saying they were hearing, people want to position their portfolio for what we would prefer to happen most, meaning a little bit of inflation in the summer and then believing Jay Powell's bedtime story about everything's going to be fine, but yet we'll steepen up the curve for banks. Okay, markets do what make people most frustrated, which is not what you think. And so what we've done here at our firm, I've got about 60% of our equity holdings in what I call the reflation inflation trade. And it's a related trade. It's a basket of goods. We've got the gold miners, we've got small value, large value, and you have emerging markets. And look what happened over the last couple of weeks, Nicole. You had small cap and the NASDAQ and emerging go down 10%, but look at small value and large value. They kept their uptrend. They never had a full 10% correction because that tells you the force is strong there because people see it as a more of a secular thing that's going to happen over the next couple of years versus just a summer pop. So what we're trying to do, everybody has to have a barbell that's a CIO, the barbell approach, because I think it sounds good or it's clickbait. Today, if I have new cash, I want to be buying my inflation things that are blown up. Gold has been off all year. The chart's so bad, technical traders, they're not even interested in it right now. But if you think we're going to have inflation, that's going to work. And don't tell me stories about how Bitcoin's taking the luster off it. It's still a major market. Secondly, emerging markets, it was down last week almost 10% from the peak. I think that that's a place where you can buy good technology. It's China-centric. Asia is really what that is all about, that emerging market index. And I think it's a big, strong buy here. The things that I love and I want to buy high and buy even higher goes back to my favorites. Small and large value, because that's where the action is. That's what's been left for dead for years, since about 2016. But I think you have to be more cautious and be more circumspect about buying it at this level. But I think that you bite every time you see minor pullback. So again, you have where I would dump money in today with reckless abandon and where I want to hold my winners. And through this year, maybe through summer doldrums, I want to buy high and buy higher. And so I think you just have to have both that idea that all of these are the same trade. But if you have $1 to invest, buy the things inside that trade that are weakest and don't mess around with what's working. Don't be in there rebalancing small value every 5 minutes as it makes an all-time high. And also remember, I'm looking 1 to 3 years out. My clients are retired. I'm not looking for day trades, but come on. These day traders, they're having problems right now. They just can't make 300% in a week. And I think that's going to cause the market to possibly become less volatile. I know that seems crazy. And you'll see these major trends persist as people go back to work, get back to their life, and go back to betting on sports versus stocks. Maybe. Who knows?
Yeah. Lee, this seems so smart and so reasonable. And on point. I see where you're coming from with this. What do you say to the people who say, I want the reopening trade. I want airlines, casinos, hotels. I want FANG. I love Facebook and Google. Or I want EVs, Tesla, and GM's working on a new EV. What do you say to people who like some of these high-flying things?
Speculation's fine, but where's your end game? What's the catalyst? We're topping out on these things. You have to, if you want to take 10% of your portfolio and buy crap, go buy some Bitcoin, go buy whatever you just said, all these wonderful things. But just remember, you can still have a reasonable thing going forward. And we may still have another couple months where if you want to play in this speculative cesspool, I'm not saying, it's not for me, I'm not doing it, but I still think you have a couple months where we're overlapping the last bull market, which is what you were talking about, and the start of this new bull market that's really been pumping since around September 1st. Of course, we only see that in hindsight, right, that it started September 1st, right?
Yeah.
I didn't really know September 1st. This was like my thesis was going to become hot from that day on. So I think just like we had in summer of 18, you have a couple months left. So enjoy your fun, be careful out there, set some tight stops. But if you have new money, please put it in your core positions and make sure your core positions are at least 75% of your portfolio if you're a degenerate gambler. And if you're more conservative, 0 to 0%.
I saw you have gold, you have emerging markets, small value, large value. Silver, is silver in there too?
Oh, yeah. So, we like to say silver is kind of the crackhead of precious metals because you get, it's so volatile. Silver and silver miners is simply a related trade to gold and precious metals with high volatility, a chart that causes you headaches. And I like to own silver right when gold is slammed, and I like to buy it about $1 of silver or silver miners for every $4 I have in gold or gold miners. And for the viewers out there, remember, the difference between gold and the gold miners or silver and the silver miners, let me just sum it up. It's about risk and volatility, right? If you want gold, that's the safe play. But if you want to delve into higher beta, then you get into gold miners. Then you get into silver, and then the final frontier is silver miners. And by then, you need to have all that you want. We're not really buying more of it right now because I got enough. So just remember, there's a hierarchy of risk. That's how you position size. That's why we own it.